traders, welcome to another video here at Forex Life. If this is your first time on the channel, please go ahead and like, subscribe, comment down below what video you would like me to post next and what you actually like about this video. Also, don't forget to turn on your notification bell so you can get notified when I do drop the next video. So in the previous video, a lot of my subscribers, a lot of you guys have been saying you want looking for a strategy for volatility pairs. So we're going to get into it. This will be for all volatility pairs. So you can trade volatility 10, you can trade volatility 25, 50, 75, 100, all the volatility pairs you can trade with this strategy, and we will only be using 2 indicators for this strategy. So let's get straight into it, guys, so that you guys can start making money with this amazing volatility strategy right now. So the first indicator, so of course, as you all know, if you don't know how to load indicators, you are going to go ahead and just tap on your chart and then tap on this little icon over there, and then you're going to tap over here on the F plus to add your indicator, and then you will get a list of indicators. We will be using the moving average. Okay, that will be our indicator. So these are the indicators here already. You guys can screenshot it, you guys can write it down. It's fairly simple. So the first indicator is our moving average. We're going to have period 20. We're going to have, let me just correct this quickly. We're going to have period 20, shift 0, method exponential, and apply to low. So you're going to click on the drop down and you're going to click on low, and then you can go ahead and make it red or any color of your choice. I'm going to use red and 4 pixel. When you are done with the settings, click on save on the top right hand corner and then back. And then the second indicator we're going to load is another moving average. Same settings, period 20, shift 0, method exponential, apply to a high. So this time we're going to choose high. Okay, previously we chose low. On this one we're going to choose high, and I made this like a goldish color and 4 pixel. Click on save and then back. So that will be these 2 moving averages on your chart. Okay, let me just change the colors. There we go. So this is how it looks on your chart, guys. So in order for this strategy to work, you need to follow 3 simple rules. Okay, so the first thing you're going to do when you open up your chart and you're going to go to your pair, you'll start on volatility 10. You go to the 1 hour time frame. Okay, the 1 hour time frame, this is where you want to be, and you're going to check the trend of the market. So let's just say we open the chart and we open the chart somewhere around here. Okay, we can see that this is in an uptrend. So all we want to do is we're going to be looking for buy opportunities. The reason why it is in an uptrend, we need all these candles over here, we need it to be above these 2 lines. Okay, this orange goldish line and this red line, we need the candles to be above them in order for it to be an uptrend. If the candles are below, or like over here, if the candles are below, that means that the market is in a downtrend, it's in a sell, and we will only be looking for sell positions, sell opportunities. So here we can identify that this is an uptrend market. The next thing that we do, now we have our we have determined the direction of the market. We will only be looking for buy opportunities. Now we're going to scale down to the 15-minute time frame. Okay, we're going to go to the 15-minute time frame, and this is where you will get your entries. So because we're only looking for buys, we see that the candlesticks are above these 2 lines. So what you're going to do is you're going to wait for a candlestick, a green candlestick. Okay, like a green candlestick over here. Let me just zoom it. Let me show you guys. Like this green candlestick over here, you're going to wait for the candle to close above this orange line. Okay, it needs to close above the orange line. Once it closes, that is your entry point. So this over here is your entry point. This is where you would have entered the market. Okay, so let's just start again. First thing we do is 1 hour time frame. We check the trend. We see, okay, the candlesticks are above both of the moving averages. We are in an uptrend. We scale down to the 15-minute time frame, and we're going to wait till we have a bullish candlestick close above both moving averages. So there, it closed above. That is our entry point. Our stop loss will be below the red moving average. Okay, we will only close the trade if a red candle closes below the moving average. Not if there's a wick, only if a red candle, like if a red candle closes like this below the red moving average, then we will close our trade. So this will be our entry point, and then this will be our exit point, because the candle closed below the red moving average. So we get out of the market right there. Then we wait, because we are in an uptrend. We see, okay, over here the bullish candlestick closed above both of those lines. So this is our next entry point, and we are in the trade from here all the way up till over here, till this candlestick over here. We closed below the red moving average. So then we close our trade and we take our profits. Remember, this is on the 15-minute time frame. Okay, so this is massive profits. Then we're still in an uptrend. The moving average, the candles did not continue below the two moving averages to indicate a downtrend. The reason why we close our trades when the candlestick closes below the moving average is because it indicates there might be a possibility of a trend reversal. So then we close and we take our profits and we wait to see if it continues down. Did not continue down, we go, and there we have another entry. Candlestick closed above the moving averages, so we enter our trade over there and we exit our trade over here. Candle closed below the moving averages. Okay, and now we are just waiting. We don't know the trend of the market yet. On the 1 hour, it's still indicating to us that it's an uptrend. It's still above, so we will wait for a candlestick to close above in order for us to take the buy opportunity. Remember, we always follow the trend on the 1 hour time frame, and this applies to any volatility piece. I'm going to show you a sell example as well. So let me just remove this, and then let's just go back in time, and here's a sell opportunity. So we see the market is in a downtrend. I'm just going to mark this quickly. Over here the candle closed below, so that's the sell. We're going to move, sorry, that was on the 15-minute. We need to do this on the 1 hour time frame, so let me remove that 1 hour time frame. Here's our sell opportunities. The candle closed below. We move down to the 15-minute, so let me just see where's that line, and that line's over there, and that would have been our entry point. So we would enter the trade over here all the way down till over here, because the bullish candle closed above the two moving averages. Remember, it's just the opposite for a sell. The sell, the green candle closes above both of them, that's our exit. If all the candles are below, that is our sell. If the bullish candle, the green candle, closes above both moving averages, that's our exit point. For a buy, if the red candle closes above the moving averages, that's our exit point. So then let's see. So when we exit the trade here, we wait for it to close below. It closed below over here. We enter again, and then we hit our stop loss over there again. That was a short trade. Now we wait for the candles to close below again. Candle closed below, we would enter there, and we would exit over there. So that would have been a losing trade as well if we did not trail our stop loss, but that would have been our stop over there. So now we're just gonna go ahead and check other pairs quickly, so you guys know that it works on all volatility pairs. So let's see, the most common one was volatility 75. Everyone has been asking me for a strategy for volatility 75. So at the moment, on the 1 hour time frame, we are still in an uptrend. We are still in an uptrend. All the way uptrend started over here. Only once this candle closes, this 1 hour candle closes below the 2 moving averages, and it's followed by another red candle, then we can confirm that it is a downtrend. But right now we are still in an uptrend. So I'm just going to mark this so we can go back and see on the 15-minute time frame. Remember, from the 1 hour you go down to the 15-minute time frame, and then you're going to wait for your entries. So this is now just with back testing. So over here the candle closed above the 2 moving averages. This would have been our entry point. Would have been in the trade, still in the trade, and we would have exited the trade over here. So all of those profits would have been made and would have exited the trade over there. Remember what I said, we will not exit the trade with a wicks because the candle did not close below the red moving average. Only once the candle closes below the red moving average, then we will exit the trade. We do not have another bullish candle crossing above both moving averages, so we would not enter a buy again. Here is a sell, but overall we are only looking for buys because on the 1 hour time frame we are in an uptrend. So we wait and we closed above here, but over here our stop loss got hit. Closed there, stop loss, because this is ranging, this is moving sideways, but those 2 losses are very minimal compared to the profits that you have made. So here we closed above again. Now we will continue our buy all the way up, and then stop loss over there, and then closed above, into the trade there, close your trade over there, close below the moving average. So this is just moving sideways. Over here the bullish candle, the green candle, closed above both moving averages. We enter the trade and we will exit the trade over there. So like I said, it works on all volatility pairs, guys. Go ahead, test it out, test it on your demo account, and then on your live account come back to me, let me know what you think about the strategy and what strategy you would like me to do next. Of course, always apply risk management. Like I say, no strategy is 100%, but there will always be losses, but your wins will always be more. Your losses will be minimal, but your wins will outweigh the losses. So I hope you guys enjoyed this video, and I'll see you guys on the next one.